Good morning, everybody, and thank you for joining us here today. We've got a great webinar discussion here about the EQ Resources Bankable Feasibility Study and everything else that's happening at the Mount Carbine Tungsten Mine. We're joined by the CEO, Kevin McNeil, and also the Head of Exploration, Tony Bainbridge. We'll be talking through some questions around the BFS, and hopefully you'll be all enlightened at the end of this as to the progress at EQ Resources, which is going really well and gaining some attention in the markets. Good morning, Kevin. Good morning, Tony.
Morning. Good day, Peter. How you doing?
All right. I'm going to start with some questions around the Bankable Feasibility Study, probably directed at you, Kevin.
Sure.
So based on the strong BFS update, which delivers a 47% increase in NPV, could you please elaborate on the key factors that contributed to this significant improvement in project economics? And what do you think are the biggest NPV drivers?
Yeah, thanks, Peter. Well, thanks to my good friend Tony there, giving me lots of high-grade ore out to the west. I guess that's sort of the first thing, is that we developed a big resource, as you would have seen. I can't remember the number, 60-some%, I think. Increase in resource. Some of that was for underground ore, some of it was for the open pit, but we managed to convert a nice chunk of that ore into the open pit out to the west end of the pit, where we knew that ore existed out there. So Tony drilled it off, and we were able to put it into reserves, independently verified reserves through the optimal group. That was number one. Number two, really it come down, when everything we've been doing on site, we see the low grade stockpile, you really need to double the tonnage and reduce your fixed cost of this project. So we're still managed to maintain a 10-year mine life, but we squeeze some of that low grade stockpile years down, from 14 years down to 10 years, combining with the open pit, or it gave us that ability, having that. And into the future, Peter, right? I mean, we're only talking that we've done 20%. This is only 20% of the resource that we've used up, right? So we expect the underground to be supplementing some of those later years, after 6 years, supplementing the grade of those into the future. That'll all come as part of the future updates in the BFS.
So, and on some of that stockpile that exists there, does blending that help improve the throughput in the plant?
Yeah. Certainly helps improve the throughput, and then also because there's some high grade, some really high grade. It helps the processing plant, bringing down the grade, blending that in, making both, helping both get higher recoveries on the open pit ore, and having higher throughput reduces your operating costs down for the low-grade stockpile. So bringing the two together and expanding in 25 was a natural, and we kind of knew that was coming out of the last feasibility. So we worked the numbers hard over the last 6 months to get that into the new update.
Okay, and with the experience with the tailings and the equipment that you've already got, that must set you up nicely as you move and ramp up. You're not starting with brand new equipment and having to find out, that something doesn't work properly. It's all been tried and tested.
Yeah, that's true. Like our phase one, so we're starting with our phase one crushing plant, supplementing that with a jaw crusher, a portable jaw crusher on the front of the phase one plant. We're still constructing the major crushing plant that will go into the future, and that'll come in sometime around January, February next year. Will come online. And again, that's part of the doubling strategy. That plant is able to expand. That was designed for 24 hours or 12 hours a day. We're just going to expand that to run 24 hours a day. So it really, the minor capital goes towards more tables and a bit more upgrading into the processing plant downstream.
So doubling of that plant capacity gives you more continuous operation and more stable revenue, therefore.
Yeah, it drops the operating cost too, right? Like by doubling, all the fixed costs just become half the price of on a per ton basis. So
and does that affect the life of mine, Kevin? Does that with using the doubling the plant capacity, but also blending in some existing ore? How does that affect life of mine?
Yeah, I think if we had left it at the same, we would have been like 16 years or something. Tony might be able to correct me, but I think we would have been at 16 years. So now we're back at 10 years by doubling the in 2025 by doubling the plant capacity, kind of brought that down to 10 years, right? So it was a natural decision to make.
Okay. So why has the long-term cost of production come down per MT?
Yeah,
Is that
just
part
for
of the
that
factor?
very reason, right? That we're able to, by having additional ore, by able to running more tonnage, you're able to bring that cost per MTU down on those lower years, especially on the low grade stockpile, which moved everything forward. So I think Tony will have some pretty good news of what we're seeing in the pit currently too, from the grade control drilling and stuff. So yeah, hopefully once that is all completed, we'll be able to make further announcements on what we're seeing of the actual infill drilling in the pit and stuff. But yeah, so I'll let him discuss that.
Terrific. And I've got some technical questions for Tony coming up. But I'll finish off with an offtake question for you. How is the landscape for offtakes, and what's your view on that right now?
Yeah, good. We're fortunate here. Obviously, Cronimet had taken early stake in the project, our partner from Europe, and they've taken a stake into the low-grade stockpile and the tailings, and also they help us with offtake. They are specialists. They've been doing it for, I don't know, 50 years, something like that, in offtake, one of the largest stainless steel scrap producers in the world, all kinds of additives for steel. So tungsten is one of their specialties. So they buy it from us right at the gate, and they handle it from there, all the logistics. So we don't have to worry about any of that end of the business, and they look after that, and very long-term offtakes for us.
And I imagine for shareholders with a strategic partner like Cronimet there in Europe, specialising in specialty metals, it must be a great comfort for shareholders and yourselves. You don't have to worry too much about where you're going to sell the product. It's all being taken care for you.
Yeah, absolutely, Peter. Absolutely.
All right, Tony, it's a technical kind of question day today. We're going to ask some here about grade control, drilling progress, and pit geology. How's the drilling program helped in delineating the pit geology and providing information about the planning of the mining operations?
Yeah, good morning. Thanks, Pete. Grade control is an important part of any mining process because it gives you the day-to-day production and make sure your dilution's kept under control. We're fortunate in our pit that we've got a very low strip ratio. So when we start mining, we don't have to haul too much waste. The overall strip ratio for our pit is 3.9 to 1. So that's an excellent result, and that adds to the economics that Kevin was talking about. The grade control drilling itself is infilling between the 30-meter diamond holes that we've had drilled already. And as Kev alluded to, I'm very pleased that as we're doing that grade control, one, we're finding the grade continues well between those holes, but two, the zones are standing out very clear and marked so that it makes it easy to mine. So our miners will learn very quickly how to recognize the ore. They'll recognize, there's an interesting fact on that, is that there's tungsten is, as you're aware, it glows under ultraviolet light. So some of our geological team have to do the night shift and help mark out the ore. But it's fascinating. Certainly our Goldings contractors are captured by this fact that they can actually see what's good and what's not in the pit. So we're looking forward to working towards that.
Yeah, that would be a pretty cool thing to see, the shining ore in the evening, a bit like something out of J.R. Tolkien, I imagine. But
yeah.
And the pit itself, it's not a Kalgoorlie super pit. It's kind of I don't know, the term intimate springs to mind. You know, you can see it, touch it. It's not some gigantic thing that you have to contend with. It's something you can get close to.
Yeah, the ore body is quite contained into quite vertical narrow bands of high grade. Historically, they pulled 22 million tonnes out of the pit during the 70s, 80s under the Roach brothers. We're doing about the same size extension. So we're taking a further 23 million tonnes. 6 million tonne of that is high grade tungsten ore. And yeah, going back to the light thing, it is quite amazing that it glows. You know, it feels like Christmas down in the pit at night times. So we're very pleased. But again, you're never quite sure whether there's going to be ore between those 30-meter centered holes that hit high grade. And you know, when we're down there with the light, we're just up nicely.
Yeah, terrific. So to ensure accurate grade control and mine planning, can you share with us more details about the RC program, including number of holes, the depth, and the intervals, as you say, for sampling and analysis?
Yeah, not normally great RC drilling can be done right through the life of the mine. We're taking a slightly different approach, Peter. We're drilling out the entire first year with RC drilling first. The reason we can't use the actual blast holes for grade control is that they're vertical and our ore body's vertical and narrow. So we have to go in there early with RC drilling, do angled holes to go across the ore body, and then we get a good infill of what they look like. The grade control allows you to reduce down to about a 2-meter size block with grade in it, and that's then suitable for the equipment, which has a bucket about 2 meters wide. So, you know, they all match, and we can keep control of what's going to the ROM pad, as we call it.
And Tony, with the dewatering the pit, was there any surprises? Did the pit walls, you know, maintain integrity?
They do. Firstly, we're also pleased that when we finally got the water out of the pit, it stayed dry. That's a big plus for us, having a dry pit to work in. Those grade control holes, as we said, we've got 155 of those to do. We're sort of a third of the way through that, but we're well advanced on. We've drilled out the first month of production, so we're working through that, and the assays are still coming in on that. But again, we're very lucky because we can get visual confirmation of grade, and our geologists now are quite good at looking at the rocks and saying the grade. So that helps, and then it gets confirmed in the lab. So we have a visual protocol as well as an assay protocol that follows it up.
And with the dewatering, which would have been an interesting process, did you catch any yabbies or any barramundi in there?
It was a very clean, benign pit. So we had a number of small fish in it, but they ended up down in our TSF, which is also quite alive. We got very clean water at Mount Carbine, so we're pleased with that. And we've now got a good storage of water to operate the plant through the dry season.
Okay, now Tony, how much of the resources have now been converted to reserves? I think this is one of the...
Yeah, Kevin alluded to that. We got 28 million tonnes of 0.3% in the resources. It's completely still open to the west at depth and to the north. The eastern side has a large fault, so that's cut off. But so we've got a very open resource, 28 million tonnes of 0.3. Currently, the reserves are only 6 million tonne of 0.28, so about 20% of our resources is converted. You have to do a significant amount of more drilling to bring those into resource category and lift the confidence. 20% at this stage, Pete, so we've got a long way to go.
I think we've talked about this in previous webinars about Mount Carbine being a multi-generational mine, which is great. Given the focus on working through the BFS and preparing for mining operations, when do you see further exploration drilling to continue?
Normally in mining situations, you always attempt to replace what you mine. So, you know, over those 6 years, as we mine 1 million tonne a year of ore, our target as a minimum is adding that 1 million tonnes back as we explore. That's a nice balance that most mines have. So at the end of 6 years, you're right back where you started, and you've got another 6 years ahead of you. But we're very lucky also that as we did our exploration in some of those areas that I've referred to as being open, we've hit very high grade, and we have a very good understanding of the ore body nowadays. So we know how to drill for it. And as I say, some of our best intercepts are wide open out to the west and to the north. So we're looking forward to do that. And the other good point about mining is that you do generate a lot more cash, and that then frees up more to drill with, which when you're in the exploration stages, money's always a little tighter, so you tend to not drill as much as you like to. But when more cash starts to flow, more drilling and more results occur.
Spoken like a true geologist.
Yeah.
Just keep drilling.
Keep drilling.
Yeah, that's right. Now we'll move back to Kevin and both of you for this one. Kevin, the Goldings contract was announced this week to much fanfare. I know there's some good reactions out in the West. Can you tell us more about Goldings and how they work with you on the restart?
Yeah, over a year ago, we went out to the market with sort of an invited type tender to several contractors and on expression of interest, right? And we just found Goldings was a really good fit for us, and Goldings wanted to diversify out of coal into hard rock, into critical metals. We hit a sweet spot for them. So as a junior, right, it was really impressive to us, the amount of what I call sweat equity that they put into this project over the last year on that early engagement, where we were interacting with their guys on mining. Is this practical? What through the feasibility study, we had Optimal Mining doing all the bankable feasibility work, but they were integral Goldings in this on strip ratio, costings. Everything that went into that was very, very practical, to the point where we've worked it ramped up over the last 3 months, getting into the final contract, which we signed on Friday evening, and then announced Monday. So it was really quite a good negotiation. We had Jukes Todd had a very good representative that has worked a lot on major contracts with Goldings, so we were fortunate to have them on our side of the table, if you will. Like to as a junior, like you don't have all those resources in the mining division, right? So it was really well done by both, but it was a very good negotiation. And we've got a very practical contract where we're spending the first 12 months really identifying all the risk factors that they would have had to build into their pricing if we don't. And then so we've done a 2-stage contract where we kind of take the first 12 months, identify things, and then fix the contract for the rest of it. And because it's a relatively small operation for a big contractor, we put it for the life of mine contract. And there's obviously, if they don't perform, all those are in there, right? But it is a life of mine, just so we could get the best price possible for the operation. And Goldings have all the depth that they need to satisfy any needs that we possibly could have on this little mine, right?
Yeah, no, a great contract and well won. And on that, there was quite a campaign by EQ Resources for staffing to get the people you need for all the new jobs. How's that gone, and how many people have you got working at site now and coming up?
We're staffed up, right? It's a real beehive around here right now. This morning, like it was like the Coles parking lot out here, right? It's with contractors and builders and all the scramblings going on for the last month here. So we're up to, I think, 90 people on staff between the quarry and the EQR and the processing plant, and we're up to about 90. Goldings are targeting about 50 more people. And what's really been interesting, I fought a camp, having lived in camps most of my career in West Africa, and that we really fought it because we're only an hour. I drive to work every day. So we went with busing in from the communities, which is a much healthier environment. And strangely enough, because there's so many good people that are flying in and flying out that are just tired of it, we've got such good applications come in with this program now that so we're really excited. So we're putting a bus on from Mariba and a bus on from Port Douglas. And so the Port Douglas thing and the Mariba thing has really attracted a lot of people to come home that were working away.
It sounds very attractive. It's a career choice for me, driving a bogger and living in Port Douglas. I could do with that. That sounds good.
Yeah.
Well, it's great to see that on site, and I know shareholders will be happy to know that there's a lot of work going on up there, and it's all moving ahead. I've probably got a question here for Tony about the future drilling program around West Dyke and Iron Duke. When do you think that might be something you'll direct your attention to, and are there other areas you'd like to have a look at?
There is a lot of areas we'd like to look at first, but we have intercepts out to the west. The last drill hole the furthest west we drilled was 18 meters over 1%, so it's just left hanging there. We know that ore body plunges off to the west out there, and although it's now getting down to be a target for underground, so our next phase is getting the existing underground decline open and continuing the drill out for the underground resources there. Once we have that resource, we can go from scoping up to higher advanced studies. So the west is our focus at the moment. We had 8 meters at 2.6% in the north there in the Iron Duke. That's also pretty high priority. But both of those targets are in for future underground at this point. So our main focus, as always, is to get the cash flowing and get this open cut running. But in the background, we'll continue to drill and explore.
So, sorry, Peter, could I just add a little bit there? Like, everything we've done is to try to protect shareholder value by, not overcooking it, trying to get into production, trying to learn about it, and without having a big dilution to shareholders, right? So, including the exploration drilling, we did focus around the pit, but there's several targets that Tony's been chewing on me about. But I'd like to get the next 3 months to focus to get some of this high-grade ore through the plant, handle it through the plant, and then we're going to roll out into more exploration and obviously from the revenues out of the mine, right, without having to go out to market and dilute shareholders down. So that's our intention.
Yeah. Just talking about those extra targets that you do have out there, and there's going to be decades to go hunting for them and defining them. This pit has probably surprised over the last few years as you've gone out. How do you see it standing in global terms for a tungsten mine? It seems to be really hitting its straps.
Go ahead, Tom.
Yeah, thanks, Gab. Yeah, no, we're going to be one of the top producers outside of China. There's no question, and it's currently Australia's only sole producer. We don't see too much that can slow us down. Really, the principle being that we have the grade to go underground on. We have nice wide intervals. They're high grade, so we see the future as being very bright. And being one of the higher grade tungsten projects on the globe, it helps you. So if there's any slow periods in tungsten pricing, we'll still be, economic and running. So we see it as an excitement. We've got, we're mining over the next year's 23,000 tonne of tungsten trioxide. We've got 70,000 tonnes still in our resource yet to work with for underground. A lot of that's high grade. So it's just a case of getting the work done, I guess. But we see us, if we can keep our focus on tungsten and tin only as a company, we see us growing very quickly with the revenue we have.
I think it's a good segue into a question from a shareholder who's asked about the share price, given the relatively high levels of tungsten prices. And I get this question all the time about shareholders when their companies that they've invested into go into pre-production phase. The share price spikes during exploration. They get down into development phase, the share price goes to sleep, and it takes some time to run up. But that's usually after production commences and the risks have all been covered.
Yeah, it's a fair question, right? I asked the same question myself. We're only trading at less than 30% of our NPV currently, which I don't believe is a fair market valuation for the company. But I probably know more than the average Joe out there. But we've de-risked the project significantly, right? And we continue to de-risk it. I think there was a couple of risks, and I think Tony, once the pit was dewatered from the 30-meter drilling down below it, was it going to tie together? Did Tony hit the only spots of tungsten in the pit with his drilling? But that's not the case, right? We're seeing continuity of the veins, high-grade scheelite all the way through them, the length of the pit. So, that risk has been eliminated, right? So now it's into the processing risk, right? Is, this high-grade ore, how are we taking it out? What is, so we know we've had days with high-grade ore going through the plant. We know what our recoveries get better with high-grade ore, not less. That's what we see. It's generally easier to get a higher recovery the higher your head grade is coming into the plant. So we've beefed up the plant. We've got the new jig hitting the ground in a week's time. We got the new tables are being installed today. So everything is on track. So I don't see it as a big risk on the ramp up, Pete, but so I think it's a couple of quarters of cash flow and production, and the company will look much better. And you know what I mean? So it takes it into that next realm but it's fine,
Yeah, I can assure anybody watching this that virtually no company at DFS or even BFS stage trades at their NPV level, and to be a third of that value is better than most. I'd say in the top quartile. It's a regular question when they see value, but the market likes to see the de-risking process completed, and then, as you say, once in production, then the value will certainly be discovered. Kevin, I'll just finish up with this question, I think, about the Masan MOU. I know that was very important for you. Would you like to discuss that and the European agreement and what it means?
Yeah, over the last year, we've really developed a really close relationship with the guys at Nuifu. Now, Nuifu, for the shareholders that don't know, right? We have 16 tables. Nuifu has 300, to put it into perspective, right? They've tried over the last 5 or 6 years, they've tried every piece of gravity equipment. They've done flotation, they do downstream. They take all our concentrate and they process our concentrate, and they're requiring more, right? They want more concentrate because their refinery is running at 30 or 40% capacity. So they need more concentrate. So we're quite pleased that we're the company of choice that they seem to throw their weight behind to help us to get to that stage of production. And technically, for me as a metallurgist, I'm very happy that you can rely and lean on some of these guys for questions, and they come to site and give you ideas, and we share ideas through, right? So it's been a very close relationship, and like I said, they're going to be requiring more and more concentrate to fill up the refinery, and we're here to provide it for them. So it's a great relationship.
Terrific. And Tony, I was just thinking, is this the dream mining project for you?
Certainly in the dream location, that's for sure. I think it's been just a technical success. We went into a project that was uneconomic, and I think it just reassures again that some of the best exploration often occurs around old mines, and having a new set of glasses on, so to speak. And I think I'm excited about it. I'm pleased that the company, when it gets money, there'll be some more R&D work as well as acquisitions, hopefully, and we keep growing the company. So I'm excited to be part of it and looking forward to the future.
Thank you, and I'm sure shareholders will be happy to have you fine gentlemen running the show up there as well. Thanks for your input this morning and answering those questions. Thanks for everybody joining us here today. And if there are further questions, Tony and Kevin are always happy to answer them. Please send them through to me, Peter, at nwrcommunications.com.au. Thanks very much, gents. Have a great day in North Queensland, and we'll see you at the next webinar.
Peter, just one other question. If there's any guys passing by on the Grey Nomad trip to Cooktown or whatever, any shareholders, please feel free to give us a call and stop in for a coffee on the way by.
Terrific. Thanks very much, gentlemen.
Okay.
Good. Cheers.